Investors and traders, welcome to the channel. Today is 26th of October 2024. Hope everyone is having a great and fantastic weekend or start to the weekend or in the middle of the weekend. So we will be taking a look at the key financial stocks and ETFs in this video. As always, the video is for educational purposes only. It is not a financial advice. So let's get started, and we are taking a look at the weekly chart of KRE, which is the S&P Regional Banking ETF. And we have had a long-term target of about 62 bucks per share in this one. You can see that in the shaded region. We have several patterns completing there. And it has come pretty close last week. The week before, the week of 14th of October, it came as high as 60, spot 61. So it just missed it by a couple of bucks. So what we are seeing here is basically a negative close for last week. It made an attempt to break out of this range. There's still a possibility it could creep higher, but I think we are pretty close. And this is our target, about around 61 to 62. But it is also a pretty strong resistance level, and it will also be very close to the top of this channel as well. And then a pullback and also perhaps a deeper correction could also be expected, which could actually bring it back right here where we have this little line. And if we just move down to the daily chart, here we go. So on the daily chart, what we can see is, so here, one thing is, this is the 1.618 expansion of this entire range. It was in this range for a good while, several months, in fact, the entire until the first half of 2024. And also we have these red smaller ABCD completing here, and then the blue one, and then not really surprised that we are seeing some sort of pullback. Now whether it's gonna be a reversal or it is a pullback, that remains to be seen. And the way to figure that out is, let's draw our Fibonacci retracement. So we go and draw one from here, and I'm going to bring up 38.2 and 50%. And then we go and take one from the bottom of this range, and here we go. So it appears that if we begin to close below 54, 55, and especially around 53, then more likely we might have seen some sort of a top in here. But right now, maybe it's more of a pullback, and what we could be actually looking at is, because we have these higher bottoms here, right, and then we also have higher highs, so we can draw a trend line, something like this. Here we go. So maybe it just pulls back right into this 55, which is 38.2% retracement. And that could be a pretty good support here. Breaking below this, then it begins to look like we might be actually going for more of a correction. And then let's go back to the weekly chart and take a look at XLF. Now XLF is a index which is for the Spider Select funds financials. But it's different to KRE because this one has got stocks such as Berkshire Hathaway, which we'll take a look at in a moment. And then it also has Visa and MasterCard, which in my opinion, they are not banking organizations because they do not have the banking license, but they are part of the index. So its performance is very different, as you can see on the chart, right, compared to KRE. So here, what we saw last week is an inside bar compared to a really bullish week of 14th of October. So far, it's just a trading range behavior. It could actually pull back a little bit as well. That's a possibility. Ultimately, we are looking for about 49. That's going to be the 1.618 expansion. We do have higher ABCDs, but we have to take one thing at a time. I believe that 49 to around 50 bucks is going to be our target. Now, what is possible is a pullback right towards the this channel here. Also 20-week moving average, that is a possibility. And if we begin to actually break these support levels, then we could see a further pullback or a correction taking place. Now let's take a look at the individual stocks. So we'll start by taking a look at Berkshire Hathaway, and here we go. These are the Class B shares, and we had a look at this a few weeks ago, maybe about a couple of months ago. I had shown you this chart. We have completed this big, nice ABCD, going back all the way to March of 2020. So those are the COVID lows. It has had a fantastic run, amazing run, and the stock is really strong from a momentum perspective. Look at all these moving averages: 20-week above 89, which is above 200-week. So what is this ABCD telling us? I think I can't really remember the exact date we had a look at it, but it was somewhere, I believe in the month of August, and we were completing this ABCD. It went a little bit higher. In fact, because the momentum is too strong, so the ABCDs are they are a lot of time they're not exactly precise, but they give us the levels to watch. So it went as high as 84, so went above maybe about $20. And then ever since that, it's just been, in a trading range, just pulling back a little bit. Then what we are looking at is more of a bull flag formation, in my opinion. And if we begin to break below on the weekly chart below this trend line here, then I think we can continue lower. And if we just take this as a guesswork, in the sense that we are taking a look at the market symmetry concept, this is the entire 2022 bear market. And if we just superimpose that here, and then we take a retracement of point C to D, the 38.2 retracement comes from 398, so roughly $400. So we could actually see the stock pull back to between 400 to about 380 bucks, and it's still a bull market for the stock, but the stocks go through pullbacks. So we just need to be watching this really carefully because of this big ABCD pattern completion, which would actually mark the stock come down to about 400 bucks as a possibility. Let's move on to Goldman Sachs. There we go. So the Goldman Sachs stock, it actually pulled back last week. In fact, a lot of this price action took place last Friday. And that's why we saw Dow Jones and S&P 500 getting impacted to the downside as well. So the interesting thing about this one is it's just completing some of these ABCDs. This blue one right here, after completing our longer term target of 518. So that is in that range, in that zone where we could see a possible a pullback back into the 20-week moving average around 487 to 490 region, where we also have this trend line here as well. And if we move down to the daily chart, and here we go on the daily chart, you can have a look that this is when the earnings came out on the 15th of October. Goldman is such a big part of Dow Jones Industrial because Dow Jones is a price weighted index, not market cap weighted. So higher price stocks have a big impact. And what we saw is that it just pulled back and it's just been coming down. And last Friday, you can see that was pretty negative for the stock as well. But where it is at the moment, we have structural support right here. There's a possibility it can pull back a little bit further, close this gap that remains there. And if we just draw our ratios going back to the 5th of August, here we go. We have around 500 bucks. We have the 38.2% retracement coming. So around this region, we could find some decent support coming for this stock. And then of course we have this. If we just draw a trend line, we have a nice trend line which also takes us into that ballpark figure, maybe a little bit lower as well. So a number of things in that region of 500 bucks, 495. So we'll just keep on watching this one. Now let's take a look at the stock of JP Morgan. This is the weekly chart on JP Morgan. We can see that it made week of 14th of October made a new all-time high, and then the next week we have seen, which is the past week, it's just an inside bar. And now the interesting thing is that I'll show that to you on the monthly charts here. Here we go. This is for the new subscribers. So the JP Morgan stock, it did complete its big ABCD here, but look, the stock has been going up since 15 years and since going back to 2009. So we have a very nice strong trend in place. But look, we are also completing these really big ABCDs here. And then we have several of these levels coming around the 223 mark. Now, the in the month of October, it did take out the highs of 1st of August, so that's good. But I wouldn't be surprised if the stock actually pulled back and comes back right into this roughly 200-290 region and test the bottom of the trading range. I'm expecting more of a trading range, and if we just blow past this level like really strongly, because we do have a binary event coming up with the elections, then it just means that CD leg is getting extended, and it's a fantastic stock. Now, one of my reasons why I think that this stock might be actually going into more of a trading range and pullback is because Jamie Dimon has publicly said that he's perhaps looking at his retirement. Of course, he's gonna go, and before doing that, he's gonna put his own team there, chosen by him. But what it could often marks is that when a key superstar CEO leaves, some long-term investors, they begin to reposition as well. So that is a possibility, but really fantastic looking rally in this stock. Okay, now let's go and take a look at Bank of America. Here we go. So the Bank of America stock is, you can look at this is basically 5th of August lows. It's just in a trading range, and it's possible it comes back and test this bottom part of the trading range. It's pretty boring price action for it. But this is how the things are for Bank of America. Longer term, Bank of America, the things look pretty good, in fact. And that all depends if it is able to get above the 44, about $45 level, because that's the 78.6% retracement. Okay, otherwise we can see this pullback happening. And now let's take a look at Morgan Stanley. And what a fantastic week of 14th of October. It broke out of all of this trading range. And in fact, it went right into the 1.272 of the entire trading range here and made new all-time highs. This is fantastic because at one time it did look, once it got into this gap formation here and it pulled back, it looked like it might actually want to go back and test the bottom of the range, but it didn't do that. That's good. The 5th of August low was held. That is a really key low, and of course the trend is higher. The market has been moving higher. We could expect some sort of this bar is really strong, and my concern is whether it's some sort of an exhaustion bar and the market actually begins to go in a trading range and maybe pull back. This is what we're watching now. And now let's take a look at Citigroup. This chart is just not good. You can see that it's made several attempts at the 61.8% retracement. It has not been able to make a new all-time high since January of 2020. So there we go. Now let's take a look at Wells Fargo. Here we go. So Wells Fargo, it has come very close to making new all-time highs, going back all the way of 2018. I had thought it was doing a head and shoulder pattern, but with this one, in my opinion, that's been negated for sure. So interesting one to watch, whether it will be able to make a new all-time high or not. If it is not, it begins to pull back. That's not going to be something nice, but we are watching this one. Now let's take a look at the American Express. So the American Express also had done this big ABCD. This is the kind of ABCD we have seen in the Berkshire Hathaway as well. And here what we have seen is actually the momentum really carried it much higher. It went higher by about $20 or something like that. And then the week of 14, we see a candle where, it's just a big fight between the bulls and the bears, and they just closed undecided. And then the last week, we have seen a bearish candle formation and taking out the lows of 14th of October. So that's, not a very good price action. In my opinion, it is indicating that most likely the price is coming back into this shaded region, perhaps right towards this 20-week moving average. Let's see what we see on the daily chart. Here we go. So on the daily chart, what we have here is this is an island reversal pattern, which is one of the stronger patterns that I like to watch. and it's formed like this. It's like more of a bearish formation in my opinion. And if it begins to close below, this is where we have this support 260 roughly. I think then we could have a pullback maybe towards the bottom of this range. This is where it started its move. It can retrace down to 220 bucks. Now let's take a look at the stock of Visa. So Visa also completed this big ABCD. It's so interesting to see that there are so many stocks completing these big ABCDs. These are several years in the making. And here we have just gone in a trading range. At one point it did look like maybe it wants to go and tag 300, which might still be the case, but it could also be a double top formation because of top here, especially if it begins to close below this about 270 bucks. So watching this one, Visa, and then on the flip side we have the MasterCard. Now the MasterCard stock was stronger. It is a stronger looking chart. And we thought maybe we might be getting some sort of pullback here, but it did not happen. So it's gone higher. But if you're looking at MasterCard and Visa, you can really see that MasterCard has actually more strength into it. And then there are funds which make a long short strategy, so some might be just playing that strategy as well. So it's the long short arbitrage. So this one is a much stronger one, and we did have a negative weekly close for this one, but I don't really see anything further on the chart yet. It's just gone, the ABCD came around 480 and it went to 420. It went 40 bucks higher, where we have this expansion as well. Here we go. It came pretty close to 1 point, between 127 and 1.618. But there is a possibility of this sort of a wedge pattern formation like this with slight overshoot. Let me make it orange, and then we could have something like this. So you can see that there is this possibility of wedge formation. Let me actually make this a different color. Maybe make it like brown. Here we go. So that is one pattern to watch, because if it especially begins to pull back, and this is the market symmetry, this is the previous pull, but the biggest pullback we have had in this leg higher. And if it breaks below this trend line, breaks below this market symmetry, then we could be actually looking at this thing coming down all the way to about 400 bucks, the point B, which is going to be major structural support. And I don't know what it is in terms of the Fibonacci retracement. We can just draw one and find out. Let me actually see. Here we go. We adjust this. I have something here. I'm going to get rid of this one. And let's just take draw 38.2. Yep, there we go. 426 and 400. This is where we could look at this stock if it begins to break below this the wedge formation. One of the things about these triangles and wedge formations is when there is like breakout, it usually is, and it needs to be a proper breakout, because a lot of times these breakouts actually fail, and then it moves back into the range. And when there's another proper breakout, it's usually really very strong, and with full force it just breaks out of it. So this is what we are watching in MasterCard. I think we have covered pretty much everything that we take a look at in the financials and individual stocks. So thank you very much for watching the video. Good luck, good trading. If you like our technical analysis, how we look at these markets using pattern recognition and Fibonacci, then please do subscribe to the channel. And if you found this video of educational value, you think you learned something out of it, then please give it a thumbs up. Thank you very much again for watching the video. Good luck, good trading, and speak to you guys soon.